This is when you sell silver. So before I share when you should sell your silver, let's just cut to a clip with Doug Casey, who was recently interviewed by Kerry Stevenson from Gold Events, who also runs the Australian Gold Conference.
You mentioned bonds just a little while ago and the bond market. What do you think will happen if or when the bond market crashes? And potentially what will be the catalyst for that?
Yeah, well, what's happening is this. Interest rates are at all-time lows, which is rather unbelievable to me. In fact, something metaphysically impossible, or I thought was metaphysically impossible, has happened with interest rates and bonds. Interest rates went below zero, which actually amounts to a tax on the part of central banks against the people that own bonds. But here's the point. If most government bonds yield 2 or 3 or 4% or whatever, depending on the currency you're looking at, and inflation worldwide is running 15, 20% and going higher, eventually it's going to occur to these stupid fund managers that run insurance companies and pension funds that they're holding onto hot potatoes in the form of these bonds where they're being paid a couple of percent and they're losing value for the 3 reasons I mentioned earlier on bonds. You could find bonds being dumped wholesale.
Wow.
And where is that remaining money from the dumped bonds going to go? I think a lot of it is going to flow into gold.
Wow.
I don't think it's going to flow into the stock market, which is grossly overpriced. I think we've already entered a bear market in the stock market, actually. Yeah, it's going to be gold.
But you say that, Doug, but you're still very bullish on gold stocks. So the stock market as a whole is overvalued, but certain sectors of the stock market potentially are undervalued. Is that what you're saying, just to be clear?
That's exactly correct. But as I said, the junior gold stocks that are producers, I'm not necessarily talking about explorers and developers, and I play in that game quite a bit. But the producers are actually coining money. They're making $1,000 an ounce, and the fund managers don't care, and the public doesn't know anything about them. So there's going to be a panic into gold stocks, I think. And I think that market as a whole could go 10 to 1 from here. Even if the market crashes, yes, gold stocks are stocks, and you sometimes throw out the baby with the bathwater because gold stocks will have a bid, but it doesn't bother me.
I had a question from a client, and I'm going to put it to you, Doug, and that was that he was a big holder of silver. He bought it at X price. He wants to sell it. The spread from when he buys it from a dealer and then wants to sell it, he said, I need to sell it. I need to have some income, but I'm losing because of the spread from buying it and then selling it. Is there an answer to that at all, or as to the best way of when the time comes of them being able to do that? I didn't know what the answer was. So I thought, I said to Paul, I said, I will put it to Doug Casey and see if he's got an answer. Is there an alternative market, I guess?
Well, like I said, I've been buying gold and silver coins since my financial day one. Haven't sold a one of them.
Wow.
And I'm not planning on selling them until I see Slime or Newspeak magazines, if they still exist by then, running a front cover with a golden bear tearing apart the New York Stock Exchange. And at that point, I'll be selling my gold and buying things like Berkshire Hathaway and other blue chip stocks, which I expect will be relatively much lower and gold much higher. So first of all, you should buy these coins for safety and security and prudence. They're not trading vehicles. They shouldn't be at this point. So don't think of selling them. And frankly, silver coins, like these 1 ounce silver rounds that all these, koalas and kangaroos and Canadian beavers and what have you. generally speaking, let's say silver is $25 an ounce, which it is right now, roughly. You have to pay 30 or 32 for a 25, you know. Don't worry about selling them. The problem is going to be being able to buy them and take physical delivery at a reasonable price. So don't get panicked about that. Buy them and put them away until you can dump them all for real bargains, which will occur at some point, in the not too distant future, I suspect.
So I'll put a link in the description below to the full interview with Kerry Stevenson. I highly recommend you guys do. And also register for the Australian Gold Conference. Now, I've been attending the Australian Gold Conference and a lot of Kerry's events for a long time, both her online and also her face-to-face events. And there is so much value out of that. You get a lot of wonderful economists and wonderful precious metals experts, and then you get to hear and listen to a lot of the top miners, top explorers that you could potentially be investing in. Now, I'm a big fan of Doug Casey. I find Doug Casey and I share a lot of similarities in our theories and our thinking when it comes to topics like history, science, politics, philosophy, and of course, economics. And his book, Crisis Investing, had a huge impact on my investing career and my outlook, and also led me to Austrian economics. And so I did this video, Crisis Investing, Gold and Silver, and I went through his book, Crisis Investing, for the rest of the 90s, and I picked out the highlights in this book talking about gold and silver. And so, in fact, this was one of my favorite videos I've ever done on this channel. If I was a gold and silver investor, or just an investor in general, this is something that I would want. The content and the value out of this video, I just think is so high. So if you guys haven't watched it, I just highly recommend it. I'll put a link in the description below. This is one of my best videos I've done on this channel. And you know what? I haven't had a look at the views on this, but I suspect I haven't had many views on this video at all yet. This is one of my favorites. Now, I'll plug another little video that I did, Doug Casey's Economic Lesson in 3 Minutes. Now, the title is a play on Henry Hazlitt's book, Economics in One Lesson. And it's a very short video. I think it goes for like 4.5, 5 minutes or something. 3 minutes Doug, 1 minute of me talking. And once again, this short little video has so much value in it. If you really want to get a quick bite-sized economic lesson, then once again, I highly recommend you guys watch this one. I'll put a link in the description below as well. So when should you sell your silver? Well, I'm like Doug. Don't sell it. Don't sell it. The only time that you sell it is when you can sell your gold and silver for a lot of other assets. And we call this wealth cycles. And so one thing I'm big on this channel is not measuring gold and silver in terms of dollars, but measuring it in terms of other assets. So, how many gold ounces or how many silver ounces to buy an investment property or a house or the stock market or individual stocks or other assets. And, wealth cycles. If you guys don't understand wealth cycles, once again, I'll put a link in the description to this one. It's a really good video that explains what wealth cycles is all about. And speaking of wealth cycles, I did this video where I shared my own personal experience using wealth cycles, where I turned $68,000 in Australian dollars into silver, which then ran up at the same time that the US housing market crashed. And then I sold my silver and bought 6 cash flow properties. Held those things, and guess what? I've been selling those recently and converting them back into the precious metals all over again. So I've gone full cycle with this whole wealth cycles thing. And so I don't advise people what they should do, but I do share what I'm doing. And, I'm not all in on any particular asset class. And I've been frank and honest on this channel about my own portfolio. Yes, I have a lot of physical gold and silver. Physical. I have some nearby that I've got access to, and that's my insurance. That's for, what I think might happen in the near future. I've got some gold and silver in storage in several different locations. I then have a lot of gold and silver miners and explorers, as well as a lot of other commodities, both hard and soft commodities, in both the producer and exploration stage. I've got a lot of energy, and I've been pretty open and honest about that in the last 12 months. I've got biotechs. Some of those biotechs I've had some experience over the last 15 years and had some success in that space. And so I'm in that space. I've also said that I hold US dollars for that whole liquidity event to play out. And I'll take those US dollars, convert them into Aussie dollars when that whole liquidity event plays out, if it plays out, which will be a very good play. And then I'll be able to put that into more and more gold and silver explorers and producers and other cheap assets. And then when these things skyrocket and other assets crash, then I'll consider using wealth cycles again to sell them and to move into those other assets. But I always hold gold as part of my portfolio. Silver, I have sold it all before. This time around, though, I'll probably always hold some silver as well. I'll always hold, moving forward, a percentage of my portfolio in physical gold and silver. I won't sell it all. So I'll sell a lot of it when the time is right, when other assets fall in comparison to my silver. Just like Doug Casey said earlier. So what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, and I'll see you all again on another episode of Finance Uncut.